Wealth management is not just for the wealthy. Everyone is entitled to their best retirement possible. Welcome to The Retirement Engineer with Jim Kruzan, your path to a bigger, bolder retirement. Brought to you by Kaydan Wealth Management, a firm that specializes in serving the mobility technology industry. In this podcast, we help you maximize your resources and engineer your best retirement through a process-driven approach so you can get the little things right. Drawing from years of expertise, Jim and his guests will simplify complex wealth management strategies and explore actionable ideas to help you protect your hard-earned wealth and take control of your future. Now, on to the show.
You deserve the retirement you've worked so hard for, sacrificing your time and money. And you hope you only retire once, so make the most of it, okay? It's incredible, though, how small changes over time can lead to significant improvements in that retirement. Now, with that to set the stage, Jim, in the last episode, you mentioned the phrase bigger, bolder retirement and this whole concept of supersizing. An interesting idea, but maybe a little different than what most people have in mind when they think about retirement planning. So tell me, what exactly is a bigger, bolder retirement?
Well, essentially, it's just more assets, more opportunities, more enjoyment. And when you think about retirement, we don't spend a lot of time talking about paying bills, making sure that we have a roof over our head, make sure that we have food in the refrigerator. We talk about the experiences. We talk about the fun things we'd like to do or planning on doing or will soon do with family and friends. And it's really the experiences that kind of drive a retirement. So what if there was an opportunity to realign assets, to maybe reframe some of the planning that's been done? Would that lead to an opportunity for more, perhaps a better outcome? And what would we do with that better outcome? Would we be able to create a bigger, bolder retirement, be able to do more experiences, more enjoyment, more fun? They say there's only one life that we will live. It's also true there's only one retirement. So if we can create more, whatever that is, more enjoyment, more assets, more opportunities, in our mind, that's what bigger, bolder retirements mean.
Sounds better than a regular retirement to me.
We would hope so.
Right. But is this for everyone? Can anyone have a bigger, bolder retirement? Or are there some people who, well, they can't?
Well, first off, we believe everybody is entitled to a bigger, bolder retirement, a better retirement. And because the function is, what do we do with resources? How do we apply strategies? And what can we do to drive better outcomes? Clearly, the earlier we start with a client, the better. If you think about it, the whole concept of retirement is really a culmination of a lot of decisions that are made over a 30 or 40-year career. Some decisions we don't even think about because we think they're so insignificant can have huge impacts down the road. I can remember an example where we had a fairly young client who worked previously for a short period of time somewhere and had a small amount of money sitting in a dormant 401k. He was participating in his new employer's 401k, but he had this little bit of money. And instead of bringing that to our attention or deciding on what might more effectively be done, he thought, well, it's a small amount of money. I'll just cash it in and spend it. Well, that little bit of money, had it been moved to an IRA or moved back to his new employer's 401k, over the course of a 30-year career, could have increased 5-6-fold. And that little bit of money would have been significant money that could have led to better experiences, doing more than what he'll certainly be able to do now because of that very small decision. So working with young people or younger people earlier in their career is certainly helpful. It makes it easier to make an impactful difference to drive this bigger, bolder retirement. But that doesn't mean that we can't work with folks or make an important decision with folks that are right on the cusp of retirement or those that are already well into retirement. There certainly are improvements that can be made, other decisions that need to be made that might be able to be made better. There's opportunities to restructure portfolios, so maybe they do a bit better job of participating in a strong market. And at the same time, restructure portfolios so maybe they're a bit less sensitive to downside. And then there's this whole issue of tax efficiency. If there's ways that we have the ability to create cash flow that may have a lighter tax loading, that's just more money left in the portfolio that will be there down the road to create greater experiences. So I think there isn't a single person who couldn't benefit in one way, shape, or form from a strategy that is being used to affect a bigger, bolder retirement.
I do like this concept. In the last episode, I don't quite remember clearly, but did you say this is a concept you came up with, or are other financial advisors doing this?
In terms of rolling this all up and labeling it bigger, bolder, it's absolutely something that we came up with. And it was kind of funny how we did that. I was running late for a financial education foundation meeting early in the morning. I ran through a McDonald's drive-through to order a medium coffee. And as I was placing the order, the attendant through the speaker said, for $1 more, we can turn this into a meal for you. And although I just had coffee, I was thinking back on that. And this whole idea of supersizing, right? For a little bit more money, we have a much greater experience, a greater outcome. And it's every bit the same with retirement planning. For a little more effort, better decision-making, better portfolio management, better loss control, better tax efficiency. All those things wrapped together can drive a much bigger outcome. And essentially, at the end of the day, that's kind of what we're trying to strive for all of our clients.
Is it something that other advisors really aren't focused on?
To drive a bigger, bolder retirement, you have to come at financial planning from a comprehensive perspective, a comprehensive point of view. There certainly are other firms out there that drive this discussion around comprehensive planning. That said, in my now 40 years of experience working in this industry, I would have to say that many advisors kind of fall into, or advisory firms fall into essentially four camps. You have those that are driving a comprehensive approach to financial planning. And I would say that their outcomes or what they do or their philosophy isn't significantly different than what we're doing. I would also say there's a vast majority of advisors out there who are just interested in the financial planning component and will leave the investment management component to the client's own devices or some third-party manager. At the end of the day, my opinion is it doesn't provide the same integration, and more than likely, it may not drive the same outcomes. A third group are those that do just the opposite. They're absolutely interested in portfolio management, and they provide absolutely no or very little financial planning. And I think that a lot of the big levers that can be pulled, the things that can be done to drive big outcome changes, really rest within the financial planning component. So I think if that's the approach the firm's taking, it may also not be driving nearly the same degree of outcome. And then the fourth area are those individuals who are essentially selling a particular product. They're looking for individuals who are interested in whatever the benefits and features are of that particular product. In that case, the client really isn't getting a holistic approach to their other investments and also aren't really getting any help with all of these other financial planning decisions that need to be made along the way. So yes, there are folks that are providing comprehensive planning. I don't believe they're calling it what we refer to as driving a bigger, bolder retirement.
How do you help a potential client understand the supersizing concept and really what it can do for them?
Yeah. So when clients come in and they're interested in talking about retirement planning, to a large degree, they understand they'd like to retire at a certain point in time. They're really not all that crystal clear as to just how much money they're going to need on an annual basis to drive that equation. And there really is no discussion of what could be done to improve the experience and outcome. Our approach is we run all the analytics. We take a look at exactly what it's going to take to drive their idea of retirement. And then this is where the fun begins. Because at that point, now we can go back and say, well, look, if this were tweaked this way, or we change this, or we applied a bit more tax efficiency here, look, we may be able to create an extra X number of dollars of annual spend. What could we do with that? What other experiences could we have? How could we drive an even bigger, bolder retirement?
All right. You've touched on this a little bit, but tell me more about what you do differently with retirement plans and investment strategies that other firms aren't.
I think one of the big differences is that we take not only a comprehensive approach, as I mentioned before, but we also take a very integrated approach. We think, especially with folks we work with, the tools and programs that they're participating with through work are also extremely important. So we take an active management approach. We have the ability to go in, look at our clients' 401ks, HSAs, make adjustments accordingly, adjust cash flows going in on a pre and after tax basis. And we integrate all of that into all of the other things that they're doing outside of work. So in the aggregate, our approach is vastly more integrated than it would be at many other firms that don't take custody of clients' retirement-based programs through work. In many cases, those assets over there are rarely looked at. There may be a request to bring a statement in once a year or twice a year with an annual review, but there's a lot of adjustments that can be made over the course of the year, if for no other reason than just cash flow related adjustments based on bonuses and salary increases and all of those kinds of things. So we take a much more integrated approach to wealth building with our clients because of the access that we have to their 401ks and other accumulation product through their employers.
Talk to me a little bit more about that custody function, the custody of the 401ks. What does that mean?
Yeah, a number of years ago, it's been almost 30 years ago, there was a big change with a few of our clients' employers, General Motors, Ford Motor Company, specifically, where they went to a much larger 401k model. They left a very small 401k with very few fund choices and went to a fidelity-based model, which at the time had 130 or 140 different fund choices. And this is an increase from about 6 or 7 choices previously. So we looked at that as a huge opportunity to provide additional service to our clients and created an advisory program where we developed model portfolios that we used and built over these 401k chassis. And that grew over time. So today, our firm has custody. So we have access to our clients' 401k through a secure site with two-party authentication, et cetera. So we can actually go in real time, anytime the market's open, and look at what's going on in that 401k, what adjustments need to be made, where are they in terms of savings? Have they maxed it out? Is it all pre-tax or after-tax? And we think our counsel and our advice with respect to that provides a whole nother level of value add.
Yeah, that's a great concept. Great concept. All right, Jim, where do people start if they aren't working with someone already? How do they find someone they trust to help them get this bigger, bolder retirement?
Yeah, it all comes down to interviewing. I think it's very difficult for the public to select an advisor because essentially we sort of look the same, we talk the same jargon. When you look at 5, 6, 8, 10, 12 websites, they all look an awful lot the same. But at the end of the day, it's really the interviewing process. You need to understand what is their philosophy regarding comprehensive wealth management? What is their philosophy in terms of investment management? What are their capabilities? What other things can they bring to the table? And what is their capacity? Do they have the ability to take on new clients and be able to create the same experience with those new clients as they have with existing clients? You need to ask a lot of those questions because you're hiring somebody who you would hope will work with you and work with you over a very long period of time and hopefully drive better retirement outcomes. And that's what we're all hoping for.
What are some of the resources you offer?
Yeah. So we have obviously at our site, kaydanwealth.com, we have a number of valuable resources. We have several things right off the bat. We have a piece that describes the 5 questions to ask a financial advisor and avoid hiring the wrong one. We think that's really useful. And that's a great basis upon which to kind of drive that conversation with an advisor. And then we also have the 7 common retirement planning mistakes. All of those are available. There's much more. The best way to get access to that is you can call us at 1-800-638-6900 or go to our website, kaydanwealth.com. That's Kaydan wealth.com. And then you can just click the Get Started button, and that'll start your journey toward a bigger, bolder retirement.
And now, listeners, you take some action. Follow or subscribe to this podcast, and make sure you share it with friends and colleagues. I'm Patrice Sikora, and thanks for being with us.
Thank you for listening to The Retirement Engineer with Jim Kruzan. Click the follow button to be notified when new episodes become available. Visit our website at www.kaydanwealth.com or give us a call at 800-638-6900. The information covered and posted represents the views and opinions of Jim Kruzan and this episode's guests, not necessarily those of Kaydan Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.